Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are taking a look at the short-term and the macro price action, discussing exactly how the price action has responded to the recent economic news, that being the interest rate data, and of course, the Federal Reserve press conference following. We are going to be taking a look from a technical and a structural perspective exactly what is happening on Bitcoin's charts, as well as the total cryptocurrency market cap and total altcoin market charts. Before we go ahead and get stuck in, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram. That is the first link in the description below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by clicking the pinned comment in the free channel, contacting our admin, checking out a 50+ month trading track record via the first link, checking out a 10-minute video showing you exactly what you'll get access to and showing you inside the channels via that second link. You'll get access to two channels, the main trading channel and of course our exclusive group chat. So go ahead and check it out and we'll see you in there. Let's dive into the content. So as we can see, over the past 24 hours, we had seen a fair amount of short-term volatility, with of course yesterday's rally being a consequence of some announcements made from President Donald Trump. Number one being that he was expecting to make a quote earth-shattering announcement, which I don't think has actually been announced yet. Anyway, the market rallied in anticipation of what this earth-shattering announcement may be, rallying back to 97,000. The second announcement being that they were going to have more discussions with China in regards to the current tariff trade war. So both these announcements resulted in a lot of front-running, a lot of, I guess, positive anticipation, which resulted in the market rallying. However, since then, we did see the interest rate data release, and the interest rate data was left unchanged, and it has been now unchanged for 5 consecutive months, sitting at 4.25 to 4.5% since December. The meeting itself was more or less uncertain. I would say it was quite disappointing. Of course, when we come to these meetings, we always hope to see a degree of clarity, a degree of decisiveness, but it's been pretty certain recently, and from what we've seen in the past 5 meetings at least, we've seen a lot of uncertainty, and I think Jerome Powell's really nailing that home, that even today, even now, there is still a large amount of uncertainty, quoting that uncertainty about the economic outlook has increased further than what we have seen in the past. So not only do we have more uncertainty now, he's also indicating that we may be at risk of stagflation. So there's a lot going on here, and these of course are not particularly great signs, is because uncertainty around economic outlooks increase further essentially alludes to that they are not sure what they are going to do in future periods when it comes to interest rate reductions. But the market is still expecting that there will eventually be interest rate reductions, but we just don't know when. So with that, we did see some short-term volatility toward the downside, Bitcoin dropping back to around 95.5, and of course we have bounced since then. So a null event all in all. Moving over to the economic data, the DXY and the S&P 500, let's take a look first and foremost at the overall volume and liquidation. So volume and liquidation, so 24 hours, up 18%, 217 billion, for volume, and liquidations down 29% at 197 million. Again, pretty cut and dry through the middle over here, 111 million shorts, 86 million long, so relatively even over here in liquidations. Looking at the DXY, not too much happening here with the DXY again. We did see the DXY hold underneath that critical level, moving into the weekly close at 100. we are still sitting here under 100. Again, this 100 point, this prior change of character being a trigger point for a continuation to the 200 moving average. Until then, expecting bearish continuations on the macro. This will be bullish for risk assets. Not too much more to say about that. Moving over to the S&P 500, again with what would be perceived to be more bearish economic news. We didn't really see too much movement upward for the risk asset market. The S&P 500 is still now retesting that 50 EMA and sitting under this major level of resistance, which happens to be around this $5,700 level. Now, this $5,700 level, again, has acted as prior resistance in the past. It has also acted as prior support in the past, a level of which we need to break above to essentially result in a strong continuation upwards. But until we do that, we are challenging immediate resistance and run the risk of corrections back down. So we have seen a fantastic rally. We have seen a nice breakout, but we are now approaching this first level of high time frame resistance, where if we break through, we will see continuations, but until then, we do run the risk of rejections. We need to see how this develops moving into the new week. And of course, guys, really quickly summarizing that economic data, interest rates, not too much of a change. Again, left unchanged really since December. Impact on the market short term, we saw a lot of volatility. Long term, I would say the narrative is still remaining solid. The narrative at the moment is that we are likely going to see interest rate reductions at some point in the future. The uncertainty surrounding when that is going to happen. So until we get clarity around when that is going to happen, it is unlikely the market is going to see a dramatic, massive move upwards, but it is also unlikely the market is going to see a dramatic, massive move downwards, right? Only if we see clarity around future interest rates not reducing will we then see the market massively nuke, and only if we see clarity around future interest rate reductions happening sooner or a specific date, we will see the market rally in anticipation. Until then, it is likely we see this continuous effect of what we've seen in market, where we have these rallies toward the upside, these drawn out consolidations, and then these large corrections. And the rallies toward the upsides, drawn out consolidations, and large corrections, etc., 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 continuing over and over again, as we've seen most of the year and most of last year. So that is it, guys. Let's go ahead and jump into our Bitcoin analysis. Now, before we do, make sure to sign up to BitGet, BitUnix, and BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content, and of course, you'll support yourself in your trading journey, trading on exchanges I trust and I use. Go ahead and check it out. We'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, guys, let's go ahead and jump back into it now. I would like to note that I did make a post on Telegram, in our Telegram channel. If you do want to have a quick dot point breakdown of those key points discussed in the Federal Reserve press conference, you can check them out, save them, read them again in that Telegram channel. So go ahead and check that out. Let's jump into this analysis. So the total cryptocurrency market cap, we are starting on this again, and we've been talking about this every single day now for the last few days because it is very, very important and very relative. The total cryptocurrency market cap, for a lot of people who don't know, I'm sure a lot of people do know, but there are people watching who are brand new, is essentially a representation of the entirety of cryptocurrency as a whole. So it's not going to give us exact points of which specific coins are going to rally up and down, but it's going to give us a general understanding of the direction of the cryptocurrency market, and thus the probabilities of upward or downward continuations for specific coins that we are watching, or of course in this case Bitcoin being that of the majority of the market share, particularly when we look at Bitcoin dominance, it is very, very high. So when we look at the total crypto market cap, it can be used as a leading tool, or at least a tool to assess the health and the strength of the trend in regards to cryptocurrency as a whole, and thus the probability for continuations in current trends on individual assets within cryptocurrency. So when we're looking at trigger points that we need to break to confirm macro continuations upward and higher for the total cryptocurrency market cap, we are watching prior levels of historical support. Once again, prior historical support becomes future and current resistance. So this is a 2 to 3 month long horizontal support. It is now acting as a major point of resistance that now sits at 3 trillion to 3.08 trillion. We need to break through this region to confirm the market is going to aggressively continue upwards, targets being the POC level at around 3.24 trillion. That will result in Bitcoin pushing above $100,000 if we see the $3 trillion level break. Until then, that is going to be an area of major resistance where rejections can develop from. I'll say this as I said last week. Even if we see rejections from 3 trillion, these will still be considered healthy pullbacks, provided the pullback does not result in the total market cap dropping below the prior higher low, which is going to be our current level of support at 2.83 trillion, essentially the 50 EMA. If we drop below the 50 EMA, that is going to signify the price action was unable to sustain above the prior higher low, unable to break the resistance, and will confirm a continuation back into lower levels of liquidity at around 2.6. So that is going to be worst case scenario. If we do not break through and we lose a 50 EMA, we are looking for rejections back to 2.6 trillion. That would result in large corrections for altcoins, and it will result in a pretty substantial correction for Bitcoin, potentially back to 89,000. Maybe even a tiny bit lower. That is the worst case scenario in the bearish scenario. We have to hope that that doesn't play out. But when we're looking at the bullish case scenario, again guys, provided we sustain above the 50 EMA, provided we sustain above this support, no matter how long this consolidation goes for, we are still watching for a break at 3 trillion to break into this low historical resistance range on the VRPV, and again a break of 3.08 trillion to confirm the continuation toward the upside. That is it for the total crypto market cap, and that is going to be a great tool to gauge the overall probabilities in directional movements for Bitcoin and the altcoin market. Now, if we're looking at altcoins individually, when we're not looking at Bitcoin, for the individual altcoin to start performing exceptionally well, and again, there's always going to be a handful of altcoins that do very well, a handful of altcoins that do moderately well, and a handful of altcoins that underperform, okay? Especially when the altcoin market itself is growing more and more and more. The supply of, the amount of money that is moving into the altcoin market is now spreading across many different altcoins because there are significantly more altcoins this cycle. So a larger amount of money is being distributed amongst an even larger amount of asset allocation pools. So that is resulting in the individual altcoin either not performing as well on the higher time frame, or having specific periods where the altcoin performs exceptionally better than all other altcoins, but then dies off. So we have these boom and bust cycles for altcoins, or we have these periods where we have significant underperforming on the higher time frame, followed by terrible pullbacks. And that's what we've seen for the majority of altcoins. The majority of altcoins last year performed exceptionally worse than anticipated from prior cycles, and then corrected aggressively to new lows before Bitcoin even went into a bear market. So we have seen that play out. But on the flip side, we also saw some altcoins do exceptionally well, ridiculously amazing. Most of those meme coins doing fantastic in comparison to the rest of the altcoin market. And that is simply because we have so many more places for the money to flow into this cycle. That doesn't mean the altcoin market cap analysis is useless. The altcoin market cap analysis, just like the total market cap analysis, gives us an indication of the direction of the altcoin market. if the altcoin market cap is moving upwards, it is likely that most, if not all, altcoins will be moving upwards. But here's the thing, every altcoin is moving upwards by a different percentage. So some will move up by a small percentage, some will move up by a medium percentage, some will move up by a large percentage. And again, that comes down to the distribution of the money flow into the specific altcoins based on current narratives, etc, etc. So that is something to keep in mind. But for the altcoin market to have that rally upwards, we need to break through 840 billion, which is essentially just as prior lower high, okay, higher low. If we break through that region, we see a continuation. For a correction for altcoins losing this baseline, this orange line will result in a stronger correction for the altcoin market and will be a very bad sign. So we're kind of pushing between a key resistance and a key support right now. Let's move over to Bitcoin, guys, and discuss the short term. So here we are on the short term price action for Bitcoin, moving down to a hourly chart. Let's take a look at it. So as we saw, a lot of volatility in the last 24 hours, particularly with that announcement of the earth-shattering news event. Now, if someone knows more than I do when it comes to the political environment in America, I don't really keep up to date too much with it as a broad thing. I only really watch what is relevant to me when it comes to trading and investing. But if they have actually announced what that earth-shattering announcement is, I would love to hear it. I haven't looked into it. Maybe they have, maybe they haven't. Now, I'm going to assume they haven't done so, otherwise I probably would have heard about it by now, but on the off chance I haven't heard about it and they have announced it, go ahead and comment down below. I'd love to hear it. And if you've got any theories what that may be, also interesting to hear what you guys think it may be. I've got no clue what it may be. It could be something to do with Nvidia and Saudi Arabia, as one of our members mentioned, but we have no clue exactly what that may be. Nevertheless, the price action saw a surge, it saw a correction, it retested the 50 EMA, it has bounced back upwards. The reality is we are still under our resistance. So the resistance, not only being a short-term resistance, but a weekly resistance, is now sitting at 98,000. We need to break through this level to see continuations higher. Until then, we run the risk of corrections and rejections. So I'm not looking for anything too amazing for Bitcoin here. Now, if we do break through 98,000 again, we have to look at that and be, I guess, taking that at face value, expecting continuations upwards into $100,000. But until then, this is going to be a potential rejection point. Now, in terms of higher time frame rejections, again, if the Bitcoin price action loses one of our most recent higher lows, so in this instance, that is now going to be this level here at 93500, that will be the trigger for a steeper correction. As you can see, that level is continuously moving up as we create new higher lows as the price action ladders upwards. So if we lose this level, we then expect stronger corrections, which should take us back down to 89,000. Again, for that to occur, we would also subsequently see the total market cap correct. So we don't really want that to happen. Of course, it is nice to see Bitcoin sustaining, but we need to be aware of the probabilities and the potential for that to develop if that does develop. Now, the probabilities are not in favor of that until we start to see the price action lose that 50 EMA, lose that 200 moving average. Until then, the trend is very much still up. The trend is very much still strong. If we zoom out to a higher time frame over here, or zooming out so we can see the visible range, we can see that below this strong low, we enter a low historical resistance range in the VRPV. So we do run the risk of volatile and aggressive corrections to 89,000 if we lose that 93,000 support. So essentially, if we hold up 93,000 indefinitely, we will eventually break through 98 and go to plus 100, okay? If we fail to break through 98, we are going to be coming back down to challenge 93, and if we break 93, we'll see that 89K retest. Now, the 89K retest in itself is not the end of the world. It is what happens if we lose 89,000. If we lose 89,000, once again, we will be seeing a correction potentially into these lows at 76,000, which may run the risk of taking us down to 56. The reason we talk about that, the reason we say that is because on the weekly chart, if we look at the 50 EMA and the Gaussian channel upper band, which is simply the upper level of the Gaussian channel, historically, when we broke through this region, we entered a bull market. And therefore, if we break back below this region, it is likely we enter a bear market. So we need to be aware of that as a potential, okay? And if we look at the next high time frame level of support, the next high time frame level of sell side liquidity, that is going to be at 55,000. So we do have the risk of that, but that risk is very, very low chance of occurring, especially while we sustain above 89,000. Only if we lose 89,000 do we start talking about this again, do we start becoming aware of that as a more of a reality. But until then, it is not something to be too concerned about while we sit above 89,000, at least in my perspective. So let's talk about now the short term one more time. Targets, okay? what is happening, the probabilities of movements, etc, etc. So right now, again, as we start approaching resistance, the probabilities are in favor of corrections, okay? As we start pushing into this level of resistance, I'd be looking personally for rejections to develop. If we break through that region, then I'd be watching for continuations toward the upside. We're looking 100,000, we're looking 99,000. So key levels on the weekly chart. Okay, until then, potential corrections back to 95.5. Even if we see a correction to 95.5, that is still going to be a level of support. So only if we lose 95.5 do we then expect a correction back to 93. Okay, and like we said already, if we go back to 93, the potential is then in favor of 89. So essentially, to put it in perspective, above 95.5, bullish, below 95.5, bearish on the short term, okay? If we're looking for the next leg upwards, the next leg upwards should trigger upon the breakout of 98,000. That is it, guys. We'll wrap it up there. We've got a lot more to talk about, but, we're going to leave the video at that 20 minutes. I think that's long enough. We'll talk about the rest in tomorrow's video. I look forward to seeing you all then. Have a great day. Catch you then. Bye.